We've got a massive debt problem on our hands, and I think it's going to affect the housing market. It's a little early, but I'm starting to see some very early signs of people that are having a difficult time making their mortgage payments. So I wanted to shoot this video and kind of give you a different perspective on maybe some things that you should be thinking about. That way you don't get yourself in a bad spot when it comes to managing your mortgage and your finances. My name is Seanu Uyehara. I'm an area manager with Geneva Financial, and I created this YouTube channel to help you get your mortgage right. I've been in the business over 15 years and I've closed thousands of loans, and I just want to make sure that my clients and you are able to get the right mortgage so that way you don't get yourself in a bad spot. Now, over the last year, inflation has been such a hot topic for everybody. We've felt the pinch at the grocery stores, we've felt the pinch at gas stations, everywhere. Food, everything's just more expensive. And I think it's coming to a point now where it's really digging into a lot of people. And I wanted to make this video because for whatever reason, in the last probably 2 weeks, I've had a large amount of people that have reached out to me, whether it's through YouTube, my social media, or just past clients, that they're in a tough spot. And I honestly think that this is something that more people are in. They're just not vocal about it, or maybe they just don't know it yet. But I wanted to shoot this video because it worries me that all of a sudden I'm getting these phone calls, which means that I think there's a lot more of you out there that are potentially in this situation, or you're dealing with it currently, you don't know what to do, or like I said, you're heading into it and you just don't know it yet. We all know that consumer debt is at an all-time high. I was listening to a podcast the other day and they mentioned, I think the number was like 90 something thousand, but I just did a Google search before we did this video and you can see right here, the average consumer household debt is at $101,915. In 2020, it was $92,000. So it's gone up more than 10% in the last couple of years. But you know, with all the cost of food and housing and our credit card debt has just been going up and up and up. When the times were good, everyone was spending money. We were going on vacations. Everyone was shopping. And you know what? People are still doing that, except you have articles like this from CNBC that said that credit card rates are practically in loan shark territory as they hit record high. Now, I never normally look at my credit, but because I've been seeing more and more of this stuff over the last several months, I've been really cognizant about my credit card balances and interest rates. So I started to look for myself, and I've got credit cards that are 21%, 25%, 26%, 27%. But they say on average right now, the average interest rate on a credit card in May was 20.68%, round up 21%, which is insane. Obviously, this article is talking about being that it's loan shark territory, but you know, they say some payday loans charge 400, 500, or even 600% when it comes to their costs. But you can see here on this chart here, the average interest rate, like I said, it's 21, 22%. So it's crazy how high things are right now. And I think for a lot of us, we're living either paycheck to paycheck or you're living off of your credit card. Now, either you're just letting a balance run and hopefully you get to it at some point. Maybe for some of you, you're hoping to maybe pick up a second job, or maybe you're hoping that next year when you file your taxes, you'll get a tax refund and maybe you can pay some of this debt off. But it's becoming more difficult. And you can even see here in this article, they say that 37 out of 100 cards tracked by creditcards.com currently cap their APRs at 29.99 or more. It's a record amount. So we're hurting right now, folks. If you are in a house and you currently own your home, I need you to pay attention to this because this is something I think that many of you, I don't think may agree with, but I think it's a way out. It might be a solution for you. So the thought is this. They say on average, every homeowner is sitting on about $270,000+ worth of home equity, which is a large amount. Obviously, it's an average. Not everyone's going to have that amount. And the average consumer is running about $100,000 worth of consumer debt. So the thought process is this. For some of you, it may be a better decision to sell your house, pay off all of your debt, and maybe put some money into savings, and also maybe look to purchase a property that maybe fits you better today than what it did several years ago when things were really good, right? Maybe you had less debt. Obviously, a lot of us were making a lot more money a few years ago, and you've had some money in savings. But we've also noticed that over the years, we are at record low savings right now. All that stimulus money that was given out, everyone spent the money. Or if you saved it, you've probably spent that money already because of how expensive things have gotten. So if you were to look at your overall financial situation right now, I think this is something as a homeowner, you really have to dial in, because I get you have maybe a 2 or 3% interest rate on your mortgage, but if you're paying 20+% on your credit cards, what does that overall monthly nut look like for you? You might have a cheap mortgage, but you could be literally drowning in credit card debt. So I went to bankrate.com and I wanted to see what is a payment on $101,000. Well, we can't go more than 100. So let's just do $100,000. And let's say we're at 22%. You can see that the monthly minimum payment is $2,800 on that debt. So your overall financial situation, you might be paying $5,000, $6,000, $7,000 a month, including a mortgage. So if you were to sell your house, maybe wipe out all of this debt, put some money into saving, and then buy a house that maybe fits you better today, is that a better decision? Now, of course, spending habits are spending habits. We can't change that except for you. You have to be able to fix that yourself and maybe buckle down. But I think that's something a lot of people need to start thinking about, because the flip side to it is you stay in your home, you got a 2% rate, but what if you start missing your mortgage payments, like I've had some people reach out to me on? Once you miss mortgage payment, I don't care if you have $1 million of home equity in your house. The bank is going to look at you that you've missed mortgage payments. So why are we going to give you a loan when you haven't been able to manage what you currently have? It doesn't work that way. I still think so many people think that because they have so much equity that the bank should just give them money back. It doesn't work. And now if you miss a mortgage payment, your score is going to drop significantly, which means your credit cards are going to be affected by your credit score as well, and probably your car interest rate, and probably your car insurance rate. So all these other ancillary businesses and payments that we have that are tied to credit probably get a little worse too. So you want to protect your credit as much as you possibly can. Whether you've done a maybe balance transfer to a 0% credit card for 12 months or 15 months or whatever some of these promotions that I'm seeing out there. But if you miss your mortgage payment, I can tell you right now, you are limiting the options that you have as a homeowner to tap into your home equity. But here's what a lot of folks are trying to do right now. They're either looking at home equity lines of credit, which in most cases, those are running probably about 10%. So again, you may not pay 22% on that debt, but now you're paying 10%. And now you've created a second mortgage for yourself. And are you going to truly be able to pay that debt down? You have to get really disciplined about this process, because if not, things can spiral out of control pretty quickly. Now, for those of you that have already missed your payment, I wouldn't panic just yet. You have to either call your bank, whoever you're making your mortgage payments, see if they'll do a loan modification for you. That way they can stop the bleeding. They can maybe lower your payment and try to figure out how to keep you in your house. But if they're not willing to do that, you do have to think about what's the next step for you. Because here's the thing, renting a home today is very difficult. I've had many agents already tell me that they're getting multiple offer situations on rentals. So if you have bad credit because you've missed your mortgages, it's going to be hard for you to even find a rental today. So you really got to start thinking about the future in this situation. And this isn't to put fear in anybody, and this isn't to get you to refinance your house or sell your house. I'm telling you the real life things that I'm hearing from people from YouTube, as well as my social media, as well as people that I know personally. So it frightens me to hear this kind of stuff, because I don't think it's as prevalent as many people may think it is. I think it's one of those things that are a lot more quiet. When I think back to the 2008 crash, everybody knew about that. Everybody knew that people were going into bankruptcy, people were losing their houses. But I think this time around, the media doesn't always tell us everything that they should be telling us. And I don't think this is something that's going to get talked about too much, but I know a lot of people are hurting. So my message to you is to be proactive. Don't wait until the last minute where you literally start missing mortgage payments to ask for help. Talk to a real estate agent beforehand. Talk to a lender beforehand, because you need to make a decision. And you know what? You may not want to sell your house, but a 2% rate, and you may need to want to refinance today. I've made videos about not using your house as a piggy bank. So again, look at your options and understand what your options are. I'm not advocating for a refinance. I'm not advocating for a HELOC, but I'm telling you those are options, and you need to see what works for you. And the only way you can do that is by talking to a lender. So I've had a lot more people recently that have been refinancing their homes. As much as we've tried to hold on to 2% and 3% interest rates, for some of you, you're never going to pay off that debt. It's impossible. If you're working a 9 to 5, you're not picking up a side hustle, you don't have a big investment portfolio, or maybe a side business that maybe you can sell and exit for a lot of money, it's going to be extremely difficult for people to pay off this debt. Because let's look at this calculator. And I think it said with $100,000, it'll take you 579 months to get rid of your debt. And for most of us, that's a really long time. At least in our job, or if you're commissioned, you can have a great month and you can knock down that debt significantly faster. Maybe you have a business, you can do that. But if you're working a 9 to 5, making an hourly wage, a salary, it's really, really hard. So I think you have to think about, how do you eliminate the debt? You could do it through a refinance. Yeah, it's going into your mortgage, but you can write off the interest. You can't write off your 20 or 30% interest on your credit cards. At least you're getting a write-off on your house. And when and if interest rates do come down, you could look at potentially refinancing, assuming you can qualify to be able to get your interest rate down whenever rates do decide to come back down. It's not a popular opinion, but again, it's a strategy. It's an option. Just like with a HELOC, it's a second mortgage mortgage, it's probably going to be a 10+% interest rate, but 10% is better than 22 or 29%. Does that give you enough breathing room to get disciplined, maybe pay off your debt, pay off your bills, and give yourself a way to have a clean slate? And I think the last option, and I think some of you really need to consider this, is selling your house. You may not want to do it, but if you got $100,000 worth of debt, how else are you going to pay that off? It's almost impossible. The system is almost set up to have you fail at that point. If you have $100,000 worth of debt, how else do you pay that off without significantly changing your spending habit? You have to do one or the two. And I think for a lot of us as Americans, it's really hard to change our spending habits. That's why our credit card debt is at an all-time high. So I think these are tough questions that you have to start asking yourself, or having these discussions with your family. Do we sell the house? Do we refinance the debt? Do we maybe get a 0% credit card? Buy us some time to make a decision, or a HELOC? But do it before it gets too late. Because again, these folks that have reached out that have missed their mortgage payments, I'm sorry, there's no solution for you. You have to call your bank and see if they're going to be willing to work with you to keep you in the house. If not, you could potentially face foreclosure. And I'm starting to see more and more articles that talk about foreclosures. Like here in Nevada, there was just an article the other day that said that we lead the nation in foreclosure. Not a good sign. This is not a good sign. And this video isn't too positive of a video, but I think it's more of a real talk that I need to have with you, so that way you guys don't make the bad decision. If you wait to the last minute, you're going to rush yourself into a deal that maybe doesn't make sense, could be a little predatory. Maybe you sell your home for less money just to get the cash. And I think there's going to be more and more of that that's going to take place, especially as we head into the winter months. Things typically get slower industry-wise for a lot of people. You're probably going to want to travel for the holidays. You're going to buy your kids Christmas presents, which means you're racking up more debt. So I don't think we're in a good spot for a lot of folks. I think this is a tough conversation to have. But again, if you want to look at some options and see what is available, there's no obligation. I'm not going to force anyone to do anything. I just love giving you the information, and you can decide for yourself what works for you. Because I really would hate to see people lose their homes, especially after the last couple of years that all this equity was built up. And not only that, but lose the equity. For most of you, that's hundreds of thousands of dollars that if you don't take care of your house, if you face foreclosure and you don't know what you're doing, the bank's going to take the house back, and unfortunately you're going to lose out on a ton of money. So be smart. Share this with maybe a friend or family that could potentially use that serious talk and maybe some brotherly advice as a friend. And again, if you need some help, reach out to me. I'm happy to talk with you and just make sure that we get you dialed in. So thanks for watching. I'll see you on the next one.